Unpack listeners. My name is Larry Kalbig, founder and CEO of the Haven Financial Group. I have Glenn Ramey with us this segment, Kim. He's our insurance specialist, and he's up to his eyeballs, and Isabella as well, with the Medicare question and the topic that you addressed with me in the first segment. Glenn, good to be with you.
Thank you.
Glenn, great to have you here. Always enjoy these conversations. I was asking Larry off at the top of the show, and now we want to pose this to you. This is open enrollment. And of course, we've had a government shutdown. I've heard a lot of people saying, they've really been leery. This has been very, very scary as a result of that government shutdown. How has it been impacting open enrollment, and where do we stand sort of, at this stage of the game?
Yeah, I'll say the good news for people in retirement is most of the problems that are being discussed in Washington related to the shutdown are really about the pre-65 market than they are the post-65 market. Okay. But with that said, there are unprecedented changes in healthcare across the board of all sectors. And for Medicare specifically, what we're seeing is increased costs and a contraction of benefits and a limitation of choices. A lot of plans are being discontinued that were offered before. Insurance companies consolidating down in certain counties that they used to sell in that they're not selling anymore. And a lot of the extra benefits we were used to and the lower copays we got used to are raising for next year, causing a lot of individuals to say, am I in the right plan anymore? Is there another one that would be better for me?
Yeah. Now, I know you guys try to help your clients walk through this process, a process, by the way, that I think that both of you have said in the past, everyone should go through every year. You should at least sort of investigate.
Yeah, at least have a conversation, even if it's a brief one about, am I in the right position? There's formulary changes, there's premium changes, there's copay tier changes for what we pay on our medications. That's kind of, I'd say, the biggest area people could focus on. If there's anywhere to save money in healthcare, in retirement, in Medicare, it's going to be on how our prescription drugs are covered. I always like to say in workshops that we do, no matter what side of the aisle you're on, Fox Business and New York Times have the same articles talking about seniors missing the opportunity to save money by not shopping their Medicare plans out based on their prescription drug coverage. Sure. And I can attest to it.
I bet that's true. Well, you can understand. I mean, I think people get into the routine and you don't want to go through this again and you're comfortable. And so you just don't pay attention. I would also assume, Glenn, that, and I think you mentioned this right off the top, so you need to, if nothing else, just review your policy to make sure that you're still getting the same benefits that you got a year ago.
Exactly. I think people should be paying attention around September to a notice that comes out from their insurance companies every year called an annual notice of change. And in that notice, it's supposed to tell that consumer, here's what you had this year, and here's what it looks like next year as a side-by-side comparison to their insurance. I think a lot of individuals are missing that notice, not paying attention to it. As you just said, getting complacent and comfortable and realizing there might be missing something that would be material to whether they want to keep that insurance plan into the next year or not.
Sure, absolutely. So, Glenn, having said all of this, talk about what you guys at Haven do to help people who walk through the door and say, I'm about to retire and I have no idea what I'm doing with healthcare.
Sure. Again, I would say we're first off starting with an educational approach, right? If I view my role in any way, it's that I'm an educator first, trying to inform people about what their options are so they can make a good informed decision about what they want their health insurance to look like. And then we're there to help facilitate that process, get them enrolled into the plan that's going to fit their needs the best, and then be there year for year for those questions that come up in the middle of the year. Hey, that claim got denied and I don't know why. And can you tell me if that's right or wrong? And if it's wrong, what are my next steps, right? We're not just there for that moment of signing up. We're not just there for the review at the end of the year either. We're there for that entire year. Whenever something happens, we're that resource they're going to go to make sure they're getting what they're wanting out of that insurance policy they purchased with us.
Mm-hmm. No, those are absolutely reassuring words. Glenn Ramey is our guest. He is an insurance expert with the Haven Financial Group. So, Glenn, what do you think are the biggest mistakes that people make when it comes to their health care in retirement?
Underestimating cost.
There you go.
Underestimating cost and thinking that some things are covered by your health care that are not.
Okay.
Right. Assume that every year we're going to see price increases to our insurance. Inflation is no different in healthcare than it is anywhere else in our economy, and sometimes growing faster than most things. And it's not just the premiums we pay, it's the exposure to the medical bills we might owe under those policies. So I've got something I say to clients new that I think is powerful, but it's kind of a joke, which is I got bad news to share, right? We don't get healthier as we age. We get sicker, right? Just the nature of things. And are we prepared for a time where we might be fighting a chronic illness, not a curable one, that we're going to have to manage for the rest of our lives? And did we incorporate that potential cost into our plan selections when we were first going into our Medicare options?
Can you give us an idea of, after 65, what people can expect to pay for the remainder of their life?
I mean,
there's
it's a broad range, Kim.
Sure.
So I can say at the bare minimum, people are paying for their Medicare benefits. And maybe they have a zero premium Medicare Advantage plan as an example. I have other clients paying more than $500 a month for their Medicare policies, in combination of all their cost added up together. So it really varies on what that person wants out of their insurance, what their health is, and what are they wanting to do today while their options are still there that might lower those costs in the future. As an example, again, if people don't know, there's two options in Medicare, Advantage or Supplement, and only that second one is guaranteed in the beginning of buying Medicare. Supplement plans are underwritten after being on Medicare for 6 months. So did we really consider whether that was the right option for us, knowing that we might not be able to change that option later when our health isn't the same?
I'm listening to you, and I'm 62 years old, and I'm still working, so I have my employer's benefits. But I know that I'm going to call it quits at 65. How soon do I need to start taking steps to educate myself and get ready for this change?
Maybe 6 months, maybe 4 months, maybe 2 months, depending
before
on how
retirement.
Much you are. Yeah.
Okay.
Before retirement. I tell people to come in as soon as they're ready to have the conversation, right? Are we building that into the budget? What is it going to look like? And even if the costs aren't exact to the time they're going to be changing, we can give them that estimate so they can build that into that income planning they're going to do for retirement to make sure the choices we're going to make a few years from now are going to fit into what our goals are going to be in retirement as well.
What about
if I could add, Kim,
sure, go ahead,
Glenn, if being a guy we have you, could you just comment on why we think HSAs are so very important and why the listeners should be aware that Medicare is not long-term care?
Yeah. So two things there. So on the HSA side, I think these are health savings accounts for people that don't know what we're talking about, are powerful tools that can help people prepare for medical expenses, not just in that moment, but in the future as well. One of the few ways we can make our health insurance plans premiums tax-free are the utilization of health savings accounts. If we have that money left over when we retire, yeah, we can't put new money in, but we can continue to spend that money tax-free down for Medicare Part B premiums, for Medicare Advantage or drug plan premiums within retirement, which could easily be $4,000 or more per year that's now tax-free because we're using our HSAs to fund it rather than our retirement accounts. In long-term care, again, I think it's one of those things that people I wish talked about more, wish we're worried more about because it is a huge impact. We're seeing right now the median cost in our state of Minnesota at $130,000 per year for a semi-private room in a nursing facility, with the average stay being 3 years. And our health insurance isn't going to cover those medical bills for us. So are we planning for that? Regardless of whether it is insurance or other mechanisms, are we having that conversation in our retirement policies and portfolios and plans to deal with this potential cost when it occurs?
So, Glenn, as we sort of run out of time here today, let's sort of wrap things up with the idea that what do people need to know? Because, again, what we're trying to do is make sure that these are the things that people don't ignore in their retirement. What does someone really need to know about healthcare issues as they head into retirement? What's something you want people to really keep in mind?
That it is going to be a significant portion of their cost in retirement. And if they're not having the discussions, if they're not having the planning done, they could face consequences that they're not going to be happy with, simply for not having the conversation, trying to avoid it. We know it's painful. We know we don't like to talk about things like nursing homes and home health care, but these topics are important. If we're not discussing them, we're leaving ourselves vulnerable.
Yeah. Glenn, it seems like it all sort of follows a pattern, and this is the pattern that Larry lays out, and that's that you gotta have a plan. If you don't have a plan, it leaves you unprepared.
Agreed.
Good news is, Kim, the listeners, they don't have to do it alone. They can have a partner. They should have a partner that they should feel comfortable with calling up, talking to, setting up a time throughout the course of the year. Because when times are a little tough or things seem shaky, there needs to be some accountability. So you don't have to do it alone. Feel free to give us a call. There's no cost to sit down with us. We'd love the opportunity just to get to know you. And if you feel like we're a good fit, guess what? We're here to help. If not, we don't control or own anybody. It's a free world, and you can go interview as many as you want.
612-504-8400. That's how you give them a call. Glenn, thank you very much for being a part of the show. We appreciate it.
Always a pleasure. Thank you.
You bet. We'll take a break, everybody. When we come back, let's talk Social Security. This is the Haven Financial Group Radio Show.